Welcome to this video, which is all about Forex backtesting. Basically getting a strategy together or system, working out rules by doing hypothetical testing on historical data going backwards and getting a strategy that makes money. Now, how much use is it? My own view is it's not much use at all, because backtesting is really fatally flawed. Now, in terms of why is it fatally flawed? Well, the reason is obvious. You've got the historical data, you knew what happened, and you can then curve fit and bend the strategy to fit the data. Now that is a bit similar to just shooting blindfolded at a wall, then basically going over after the event, drawing a circle around each shot and saying it's a bullseye. You're doing it in hindsight. And I think what you find with traders is they really want to have a profitable trading strategy. So they put in just too many variables. So, for example, if the first set of rules doesn't work, they'll tweak the rules or they'll add in even more rules. They'll just bend the system to fit the data. The more rules in a trading system as a general rule, the more likely the system is not going to work in real time. Now, in backtesting, I have seen people come up with profitable trading systems, okay? And I can give you a single rule trading system that works now. Buy a 4-week high, hold the position, then reverse at a 4-week low, hold the position till new 4-week high is hit. That is called Richard Donchian's 4-week rule. Now, that will actually make profits over the longer term, but you'll have a lot of drawdown, okay? And basically long periods of flat trading. It'll make money, but not a huge amount of money. But it will work because it's only one rule. You cannot curve fit a one rule system. I've seen system rules, 2 work. Once you get above 3, it's not going to work, okay? And the problem is with the very simple systems that are backtested, they have too much drawdown, too long in terms of flat periods, in my view, and not enough profit. Now, I think we live in an age where people want to use computers. They make people feel comfortable, and they make them feel safe. And backtesting is a way of making a trader overconfident in the strategy. Most traders do not want to have responsibility for their trading rules. They want to automate it as much as possible, and it just simply will not work. If you look at the best traders in the world, they will have a rule set, okay? They have to have rules, but they know that basically they actually have to filter the trading signals. They need to basically decide how much money should go on a trading signal, etc., etc. So they do have rules, but they're very flexible in their approach to the rules, and they'll filter out, the trades that they think are the best. And the idea that Forex is computerized, or you can computerize it and make it a game of science, is totally wrong. It cannot be a game of science when humans are involved, and humans are unpredictable. And basically what you get effectively in the markets, they look, very sort of orderly going backwards. But they're always subtly changing. There's always subtle changes in the markets that will break any trading strategy that's been over-optimized, curve-fitted in a bank test. That's just the reality of trading. There's no other business actually that I know of where traders actually think they can come in and delegate the money-making process to a computerized set of rules and not have to do anything. If it were that easy, a lot more people would be making money. So I think, with backtesting, you can get very simple strategies that work, but normally just under 3 rules, okay? They're not going to make enough money. They're going to have too much drawdown and too long of flat periods, okay? The more rules, the more likely you are to have curve fitted it. So what's the best way to make money? And how do you really get a profitable trading strategy and be confident in? The answer is forward testing. What I mean by that is, basically find some high probability, chart patterns or trade setups, okay? Then work out a basic rule set to trade them, and then basically filter each setup yourself. Okay, it's the only way of doing it. Forex trading, yeah, can be very simple, but you cannot put yourself outside the equation. It's you and your strategy, and you are responsible for it and implementing it. And you must actually be involved. You must think about the trade setups. You must take responsibility. If you do that, you can win. If you think you can just back test, come up with a strategy that's going to just make money, I would actually say, yeah, Forex trading would probably not be for you. Forex trading suits someone who wants to be involved in the decision-making process, takes full responsibility for their signals and their strategy. That's the video for today. Thank you very much for watching me as per usual.